Welcome back to Rockstock Channel. It is Friday, May 16th, and we're back for the sixth time with Craig Shesky, the CFO of the Metals Company. Like Ernest Hemingway's The Sun Also Rises, TMC has very much become a slowly, then suddenly story. We flagged in our earlier videos that TMC stock began to rise in early January ahead of Trump's inauguration and continued to gain market recognition through late March, both from Trump's slew of executive orders around critical minerals and based on positive pronouncements about seafloor nodule collection from cabinet officials such as Secretary of State Marco Rubio and Secretary of Commerce Howard Lutnick. This momentum has accelerated. The 5 weeks since our last video have been the most significant in TMC's 14-year history, according to the CEO, Gerard Barron, in comments he made in yesterday's Q1 earnings call. We have included in the show notes below a link to the transcript from that call and the company's most recent presentation. We would also encourage you to visit the Metals Company's website, www.metals.co, and register your email to receive the company's news releases directly. To summarize the headlines since our last April 21st video, on April 25th, Trump issued an executive order to expedite permitting and evaluate offtake of critical minerals from nodules in the high seas. 4 days later, on April 29th, in a world first, TMC USA submitted an application for commercial recovery of deep-sea minerals in the high seas under the U.S. Seabed Mining Code. And then a week later, TMC CEO Gerard Barron testified before Congress with the title Deep Sea Minerals Key to the U.S. Industrial Future. And most recently, earlier this week on May 12th, TMC announced a $37 million strategic investment to advance deep sea mineral development. And two of the investors, one was from the Hess family, and a second may be known to lithium investors, Brian Paes-Braga, who back in the day sold Lithium X to the Chinese for $245 million. To recap, the Metals Company, formerly known as Deep Green Metals, is listed on NASDAQ, ticker symbol TMC. Stock price, as I'm speaking, is $3.45, up more than 3 times since we first introduced the story last June. Current market cap is around $1.6 billion, which compares to more than $500 million the company has spent since inception 14 years ago in 2011. For disclosure purposes, Rodney and I are strategic advisors to and hold equity interests in the Metals Company. We are not, of course, financial advisors, and nothing in this video should be considered investment advice. Please do your own research and read the disclaimer at the end of this video. In addition to their website, you could follow the Metals Company on X at The Metals Co. and its increasingly prolific CEO at GTB. And finally, follow the Metals Company, Gerard, and our guest today, Craig Shesky, on LinkedIn. TMC has a portfolio of 3 projects over 225 square kilometers of seafloor in the Clarion-Clipperton zone in the Pacific Ocean between Hawaii and Mexico. 2 of these projects, the Nori and Tamil projects, are ranked as the number 1 and number 2 undeveloped nickel projects on the planet in terms of size and grade, and offer an attractive alternative to Russia and China supply. But they are also rich in copper, cobalt, and manganese. And manganese could be especially relevant in coming years, given GM and LG Energy Solutions' announcement earlier this week of a new battery technology breakthrough. Their Ultium Cells JV plans to commercialize by 2020 lithium manganese-rich LMR prismatic battery cells for future GM electric trucks and full-size SUVs. According to GM, the new LMR cell unlocks 33% higher energy density compared to the best-performing lithium iron phosphate-based cells at a comparable cost. TMC has sell-side coverage from Cantor Fitzgerald, Wedbush, ThinkEquity, Fernley's, Water Tower, AGP, and Edison, with price targets ranging from $3 to $6. If you have interest in the Metals Company and would like to see any of these reports, please email us at rockstockchannel@rkequity.com. And with that intro out of the way, welcome back, Craig. When we last interviewed you, you were about to fly to Japan, a visit you referenced in yesterday's call and we'll get into a bit later. Rodney's got a series of questions, so I'll let him dig in and I'll come back at the end with a couple of my own.
Sounds great. And a pleasure to be back here, Howard and Rodney. Looking forward to the chat.
Excellent. Craig, a lot's happened at TMC since our last video. TMC USA has filed the first commercial recovery permit and 2 exploration licenses under the existing US Seabed Mining Code. NOAA is reviewing these applications under its authority from the DSH MRA. What is the status of that application and the likely timing for a decision?
Well, as we laid out on our conference call, the first milestone would be, in the case of the commercial recovery permit, the area under which we would begin mining soon. There's a 60-day review for substantial compliance. So we would expect to hear no later than next month whether or not we then move on to the next stage of review with technical and environmental discussions. For the exploration areas of 200,000 square kilometers, completeness would be deemed within 30 days. So we're coming up on, within the next couple of weeks, that milestone. So as far as the timeline, as our CEO has said, there is a possibility that we get the approval to begin sometime before the end of this year. It is possible it goes into 2026. We're not going to know for sure until we get the report from the Department of Commerce as directed in President Trump's executive order, telling the Commerce Department and NOAA to expedite the permitting of this very important resource. As Howard alluded to in the intro, this is a resource of polymetallic nodules of which TMC has 1.6 billion tons. And that's just in the Nori and Tamil areas, the contracts that were granted to us through the International Seabed Authority process. What we applied for within the U.S. Seabed Mining Code was an area bigger than that, an additional 50,000 square kilometers, where we estimate an additional 500 million tons of exploration upside. But even if you just say 1 billion tons of nodules instead of the 1.6 that we have in our SEC compliant technical reports, that's sufficient to supply over 450 years of manganese at current consumption, over 150 years of cobalt, about 80 years of nickel. So it is a very, very large solution here. But the timeline of review is going to be dictated by the truncation of that process as directed to the Commerce Department. So it could happen very fast. It could slip into 2026. We will know more at some point in the next month. But we are very heartened by the fact that there is a regulator that is ready, willing, and able to do this, and that is NOAA, sitting underneath the Commerce Department. So expect that before too long in summer, you'll get a step-by-step timeline from TMC showing not just the completeness or substantial compliance of our applications, but then what is the Gantt chart? What are the steps going forward to actually get full approval to begin commercial operations?
Excellent. And examining President Trump's comments on the executive order signed in April of this year, it appears that there was a strategic stockpile angle and a push for domestic processing capability. Will these initiatives lend support to your applications? And then, as a second question to that, how serious is the government about securing a long-term solution for a U.S. critical minerals supply chain?
Well, as far as the first question on stockpiling, I would say it's not just stockpiling, but also the directive from the president to the Departments of Defense and Energy to consider offtake and also consider rights of first refusal. What the U.S. does not want is to say, look, because we do not yet have the processing capability in the United States, which is true. There hasn't been a new smelter built in many, many decades. So this is a situation where we can provide a feedstock that the U.S., through offtakes or rights of first refusal, can ensure does not end up on the shores of China, which is where most of the processing for nickel or manganese or cobalt would otherwise occur. So what I would say is the U.S. views this very strategically, and I think they understand that with the stroke of a pen, they could very easily prevent this material from ending up in China. And then the next step, per your question, is what is the ecosystem that the U.S. can build out for the processing and refining, creating an entire industry here that, according to the executive order, might create 300 billion of GDP. It might create 100,000 jobs. That's not just, people on a boat. That's folks who are improving our port capacity, the construction of and running of a processing facility, the refinery that would take these intermediate products and produce nickel sulfate or cobalt sulfate, and maybe one day manganese sulfate that could end up in LMR batteries. So the U.S. recognizes they can't do it today. What matters is that they get the feedstock to allow them to do that tomorrow. And for that, I would say the U.S. is taking that question very seriously.
Thanks. And there was also a mention of funding support and possible avenues. What is TMC's thinking about a funding solution and your thoughts around debt equity ratios to fund the project?
Yeah, I mean, with the offshore side of the equation, it will become very clear, especially when our pre-feasibility study is released in Q3, along with a valuation read-through to the resources beyond what is Nord D. I think what you're going to see is a very commercially viable project that's going to be very attractive, not just for Ship 1, which we are going to be operating with the help of our partner Allseas, who's provided that vessel to us for our exclusive use, but then also showing this can be replicated over and over and over again with drill ship number 2, 3, 5, 10, maybe 20 one day. So the offshore side is very attractive in that you can modify existing drill ships that otherwise wouldn't have as much work to do. If oil prices are $200 a barrel, that's different than 65. So there are plenty of drill ships available for the modifications, just like what Allseas and Transocean have already done to make these drill ships ready for nodule collection. So on the offshore side, that's probably less of the focus of where we would want real dollars from the U.S. government. That said, the Development Finance Corp, for example, can invest across a capital structure. It doesn't necessarily have to be earmarked for a particular processing facility in the same way that, let's say, a Department of Energy loan might. So if down the road, weed and partnerships, make possible the construction of a processing facility and a refinery, I think it would be similar to any other project where it's maybe a 70-30 debt to equity ratio. It would be very easy to fill in the capital stack if you had a Department of Defense grant or a DOE loan. But those discussions are ongoing, yet that's really preparing ourselves for 5 years from now. What we want to prepare ourselves for now is commercial production. And that's why, let's say, direct investment in our company for some of these agencies that have been directed to evaluate just that. That could be the type of solution that allows us to ramp up production more quickly.
Excellent. And Howard touched on it. Gerard Barron testified before Congress recently, and Dr. Peacock provided commentary. What was the outcome of that hearing, and will there be a follow-up?
Well, look, the need for these hearings is to educate not only those in Congress, but the general public about very important topics. So the outcomes might be potentially legislation that supports this industry on top of the executive order that came from President Trump. The great thing about this U.S. Seabed Mining Code is that you don't have to start from scratch. The Deep Seabed Mining Code, set up in the 1980s and administered by NOAA, that predates the existence of the International Seabed Authority. This has been on the books as U.S. law for, well over 40 years. So what the outcome would be from a House Natural Resource Subcommittee hearing is education of the public, but then also perhaps the breadcrumbs necessary to lead other Congress people to legislation that it doesn't have to codify any new laws. We already have the law. The question is, perhaps, is there a opportunity in the future to make the Deep Seabed Hard Minerals Resources Act a little more updated for the current conditions in the U.S. mineral supply chain? So that could be useful. That could be a good outcome from it. But for the most part, I would say these hearings are great opportunities to spread the word, spread the message, and they led to articles in the New York Times. They led to a positive piece from The Economist that noted Trump was right to use this law to secure seabed resources. So I'd say it's more about the narrative, because when it comes to the rubber hitting the road, we already do have a legitimate seabed mining code, and NOAA is already working on these applications. So the next stage of legislation, we would say we would view that as nice to have as opposed to must have.
And that leads on, to my next question. Is it's one overlooked fact, or certainly something that I noticed, was that NOAA and U.S. companies have been long-term pioneers in seabed mining since the 70s, and there have been quite some prominent companies that were involved. Is this part of the reasoning why the U.S. did not agree to cede control of seabed mining to in international waters to the ISA?
It is not just part of the reason, it is the primary reason why the U.S. did not submit to UN or ISA jurisdiction. And look, the Deep Seabed Hard Minerals Resources Act was signed by President Carter. And then in the Reagan administration, the U.S. declined to ratify the UN Convention of the Law of the Sea. One of the reasons is, if you look in the 1970s, the pioneers on the contractor side were many U.S. companies like U.S. Steel, Transocean, Kennecott. But you also had NOAA as the environmental pioneer. And NOAA did something called the Dome Study from 1975 to 1981, where they did many campaigns, not just in the Clarion-Clipperton Zone between Mexico and Hawaii, but an area even larger than that, to set up effectively a programmatic environmental impact statement to say, we're going to do one big EIS over this whole area and beyond. Let's see if nodule collection makes sense. And their conclusions delivered to the U.S. Senate in 1995 were the U.S. should do this. The environmental questions have been answered, except they wanted to do a bit more work on the seafloor plume. And you alluded to Dr. Tom Peacock from MIT. His testimony in the House Natural Resource Subcommittee a couple of weeks ago was very clear that a lot of the anti-deep sea mining NGOs and the politicians who support them, they only cite research from 2020 and earlier. And why is that? Because all of the research since then shows the plume is effectively a non-issue. The dust that gets kicked up when you pick these little nodules up off the seafloor, it doesn't travel for thousands of miles, as has been speculated. One of the Democratic congresspeople in the hearing noted, well, what happens if the plume would go to Hawaii? That's impossible. It's scientific nonsense, and it's based on speculation that has now been debunked based on in-field observed data. So actually watching what happens when ours and other collector vehicles pick up these rocks. The seafloor plume generally rises only 2 meters above the seafloor and generally settles within 24 hours. So it means the impact stayed local. These fears of carbon sequestration or carbon potentially being released. Yeah, there's carbon in the ocean. Most of it's in the water. But the carbon that's in the seabed sediment, if there's no mechanism by which the carbon could reach the surface, that's only rising 2 meters and falling back down. That's also a non-issue. So you can go back to a lot of media reports. You can go back to John Oliver's piece last summer. None of it references data after 2020 for this reason. So for us, we feel very good that the pioneering work from NOAA has now been built upon and confirmed. And the conviction that we and our new regulator have in the low environmental impacts of this industry only continues to be confirmed. And this is going to grow as a data set. It's not that, all right, well, we did a test for several weeks. All of the answers are there. We can now move on. No, we're going to have an EMMP that shows how we're going to monitor and mitigate impacts. And also we're going to be sharing the data that we collect, which is going to grow exponentially, even from the roughly 1 petabyte of data that we've already collected. Imagine how much more data we'll have with years at sea as we begin commercial mining at least 5 years ahead of the Chinese. So this is the way to ensure that environmental impacts are understood and mitigated, and ensuring that the first contractor, TMC USA, has an open and transparent policy. And by the way, it's also regulated by the SEC. So we can't just make things up like the global NGOs can.
Yeah, that's a good answer. There have been some interesting developments in battery cathode technology. In particular, GM and others are developing a nickel and manganese-rich version. This format aligns closely with the mineral composition of, TMC's resource. How closely are you engaging with those parties?
Well, I won't speak to any particular company. What I would say is that even in our Japan trip, there were a lot of attendees to tour the facility at Panko where initial processing will occur. And, I guess with the view of seeing the products, talking about the specifications, and also seeing what the process looks like. In fact, I have in my hand here a piece of the manganese silicate that came from the smelting trials, where many hundreds of tons of material, including a nickel copper cobalt alloy and this manganese silicate product, were produced from PAMCO's existing rotary kiln electric arc furnace. So the discussions with partners has accelerated. And it's not just because of the executive order, it's because you've had milestones onshore on the processing side, and now you have a clear permitting path. What I would say for some of the US automakers that are focusing on LMR technology, which again would be in the cathode or in the battery cell, 65% manganese, 35% nickel. That's a pretty good mix, given, the value, the contained metal value within a nodule might be 43% nickel, 28% manganese. We're very well hedged in any battery technology. And frankly, if you never sold another EV in the world, we would be just fine, given the fact that for all of these metals, there are myriad uses. For nickel, it's stainless steel and aerospace. For cobalt, it's magnets, paints, ceramics. There's no way to really break the demand model for the metals that are contained in our nodules. And frankly, the supply side story is even more interesting as you see the grades of nickel and copper continue to go down globally. So GM is a good example. GM was asked by their shareholders, or one particular activist shareholder, last year at their AGM, to exclude seafloor resources from their future supply chain. And GM was very clear, and their board is very clear. No, we're not going to do that. We are going to keep all options on the table, including seafloor resources. Tesla had a very similar situation and a very similar answer. And in fact, Tesla and GM shareholders voted over 90% to side with their board, saying, yeah, we can keep these on the table. There is no free lunch. And since that time, you've seen, well, really, more than a handful of tail and dam incidents in Indonesia from the rainforest nickel industry. There have been approximately 150 deaths in the nickel industry in Indonesia over the last 5 years. It's not pretty. There is no free lunch for some of these critical minerals, and nodules present a solution that is not only lower carbon, that is not only low waste and zero tailings, but it's not in anybody's backyard. And you don't have to have hundreds of people digging into a pit to get the materials necessary. So we think the U.S. automakers at large are keeping this on the table for very good reasons.
And you just mentioned it. TMC and PAMCO recently hosted equity analysts, commodity traders, and other industry professionals to visit PAMCO's commercial facility in Japan. The delegates, it seems, had an opportunity to discuss TMC's flow sheet and the final specifications of the metal products. What was the feedback from the participants?
The feedback was uniformly positive. Um, it's not just excitement over the nickel copper cobalt alloy, but the manganese silicate product, which is a direct replacement for manganese ore in blast furnace steelmaking. And all blast furnace steelmaking requires manganese. So we feel we have very good potential buyers for that manganese product. And then also there's the potential down the road to take the intermediate nickel copper cobalt alloy and perhaps process it a bit further into a matte product, and then bring that intermediate to the US for further refining. That's easier, for example, than just building a smelter. So we feel very, very good about the feedback we received. There was an FT article this week that quoted, battery precursor maker CNGR, a Chinese company, but they were there as well and touring, and we believe we're very impressed with the product. But of course, with our U.S. strategy, we were very focused on getting a lot of this material and products with all of those specifications into the hands of potential future partners. And what I would say is, while we collected over 3,000 tons of nodules, we did the testing at PAMCO with 2,000 tons. What's the other 1,000 tons used for? Well, there are a lot of potential partners who like to get samples and start testing it themselves, and we're holding back quite a bit for that very reason.
And it mentioned earlier, is there potential for developing a processing facility in the US if it makes commercial sense?
There is. There are new players in this ecosystem who believe the standard view of 5 to 8 years to build a processing facility can be updated. And that way of thinking is very refreshing. But all of the decisions on TMC side are going to be made with return on equity for our shareholders in mind. We are a capital light operation, and what we do is explore for, do the environmental impacts on, and permit the commercial recovery of nodule areas. And, we can take that expertise and use it in a services business and grow our portfolio through earnings, equity stakes, royalties. and get a larger expanded portfolio, similar to the way, Franco-Nevada might work on land. This is the way to build our portfolio while keeping ourselves very capital light. So while there are going to be opportunities, I think, down the road on the processing and refining side, we also will keep in mind that, look, it's sometimes good to stick to your one's knitting and to not do everything thinking we're going to be the best at everything. Right now, clearly, we are the best at this industry when it comes to nodule collection, alongside the support of our partners such as Allseas, and sharing some of those learnings for value in a low capital manner is very attractive. Um, so stay tuned on that front. Eventually, the U.S. does want to see some processing of this, but one shouldn't expect the TMC is just going to go out and start issuing equity to make that happen. There are creative ways to fill in the capital stack for a project like that, using the balance sheets of much larger infrastructure funds once we're past the point of bankable feasibility and offtakes.
And you have a pre-feasibility study for the commercial recovery area underway, which is due for completion soon. Is that progressing according to plan?
Yes, it is. What I would note is that, we would have loved to have released the pre-feasibility study last year as we initially intended. The reason we didn't is because there was an election in the US and the game changed quickly, and we had to act quickly to take advantage of an open window to permit this project from a existing regulatory regime. We did just that. So we focused all of our team's time and efforts on not only getting that strategy right with the US, and I believe we did, but then also getting the applications ready and submitting those multiple months early. So now we're revisiting the PFS with the view of ensuring that the assumptions, which need to be signed off by QPs, qualified persons, per SEC SK 1300 rules, making sure those assumptions now fit this new U.S. strategy. And there might be a discussion of, all right, at what point, how many years down the road, might we incorporate an assumption on some U.S. processing? What are going to be the assumptions on reflagging certain vessels to the U.S. as is a requirement? But also there's the assumption on royalty. And the ISA royalty has been a topic of much discussion over the last several years. And, the goalposts are tighter than they once were, but there's still, many people pushing for very high single-digit royalties through the ISA process. So it's interesting when you hear people talk about this industry, again, many NGOs who decide they're commodity experts, their view at the ISA is TMC might make too much money, so we need to have the royalty very high. What they tell the media is TMC is not going to make any money. This is not commercially viable. So which is it, right? It can't be both at the same time. Luckily, we can extract ourselves from that debate and apply through the U.S. process that currently contemplates no royalty. However, there is likely to be a benefit mechanism, a benefit sharing mechanism for allies of the U.S. as the Trump executive order directs the State Department to explore just that. So we will ensure that the sponsoring states, such as Nauru Tonga, who have been with us on this journey, can see the economic benefit that was promised but never delivered from the International Seabed Authority.
And again, something touched on earlier is during the earnings call, you mentioned that TMC intends to provide more clarity on the potential valuation across your total estimated resource beyond the NORI-D. Can you elaborate on that?
Sure, we are going to, talk a bit more about the other blocks outside of NORI-D, which is less than 20% of the total estimated resource on the area for which we've applied through the U.S. process. Now, NORI-D, from an initial assessment of 2021, had a net present value of 6.8 billion. But of course, that was the only model that we had put out because we'd taken most of that resource to indicated and measured. But even on an inferred basis, NORI-D, the actual, as we went up the certainty curve to indicated and measured, the resource size went up. Usually you're used to seeing the opposite happen. So when we take, let's say, Tunnel F, which is right immediately adjacent to NORI-D, it should be very clear that there's going to be significant value from that block as well, and the other adjacent blocks, and the next, and the next, and the next. So right now, especially when TMC was trading at $1 per share, you didn't need to believe in anything beyond NORI-D. Now, this is a good time for us to say, all right, here's what NORI-D is worth, and you guys are going to like it. Beyond NORI-D, there is also a path forward to take that up the certainty curve and significant value there that to date, nobody's been underwriting to. Even some of the research analysts that Howard mentioned at the beginning of the call, they would admit that 90% of their value for this company is placed on NORI-D, and saving the rest of it as upside. As we get closer to commercial production, it makes sense for us and analysts to sharpen our pencils and show exactly what that value could be. Because, for NORI-D, TMLF, the areas immediately adjacent, this is one continuous nodule field. And we've drawn a border to say, all right, here's NORI-D. This is what that is worth with 17 kilograms per square meter of abundance. Whatever you think NORI-D is worth, TMLF should be worth 70% of that, because it is the exact same nodule field right next door, the same grade of the nodules. It's just a little bit smaller when it comes to the square kilometers. So we're going to provide that type of information and guidance later on in the third quarter.
Okay, great. I'll let Howard now cover the recent capital raise and some other questions.
Yeah. Okay. So on the capital raise, Craig, I mentioned in the beginning, but if you can, talk about the investors, but also, the size, how far that gets you, and with your capital light approach, let's talk about that first. I mean, you have a high market cap now. You could raise, and you have a very liquid stock. You could raise, I think, quite a bit more money, but maybe you didn't have the shelf registration in place big enough, or I don't know. If you could just address
Yeah, for sure.
the investors, the size, and go forward, the cash, how far it gets you, etc.
No, my pleasure. Well, first I'll start with the investors. Michael Hess of the Hess Corp family has significant experience offshore. He's also an investor himself, and he is anchoring this round and bringing to the table not just the contacts and credibility of his family, but quite a bit of energy that is going to be helpful as we continue to build partnerships in a coalition here, not just in DC, but beyond. So it's great to have him on board. He was introduced to us by Brian Paes-Braga, who you mentioned sold his Lithium X company. He's been going back early in his career, very close contract of Frank Justra, who actually was a very key investor when we were known as Deep Green. And Brian Paes-Braga was on the board of that company before it went public. So Brian continues to be a big supporter of TMC. And again, seeing him come in and put more money into this project is very heartening. And his efforts are, again, going to be very helpful as we need all of the energy we can get to build a coalition of not just partners, not just future customers, but some in Washington who are going to be very critical for not just the first commercial recovery permit, but steps beyond and beyond. This is not one administration. This is a 50-year plus project. If we were looking at NORI-D, for example, our estimate was that the mine life would last about 22 years at 12 million tons per year of production. So there are questions about how much we want to accelerate that, how much is overlapping with other grounds, but it's a many, many decade project here. And we want to ensure, and I believe we will ensure, that despite being permitted during one administration, this has the legal authority and the political and social backing to continue for many decades to come. So both of them are going to be very important on that front. There was also an existing strategic TMC investor who rounded that out to $37 million. So yes, that did line up with, remaining shelf capacity. But that was really the investment area that we were looking to regardless, given that that is sufficient cash to fund us well past the point when a commercial recovery permit would be granted, giving us the right to begin commercial operations. So this funds us to that and beyond that key milestone. Frankly, at 5 to 6 million cash burn per quarter, which is what we expect, in the second half of this year and beyond, we've earned 9 million of cash in the first quarter of this year, but we were finishing this historic application. We've been paying for vessel use. We've been paying for environmental studies from people who can publish independently, but all of that costs money. Now that the application's out of the line, we're tightening that down to 5 to 6 million per quarter. So the amount raised not only funds us for well over a year and a half, but also enables us to pay back a little bit of the debt that has been used to avoid dilutive equity financings at $1 per share, for example. So we feel very good about this runway. It gives us quite a bit of time to explore many of the alternative financing options from the U.S. government and strategic partners that we talked about earlier.
Okay, that's interesting. So Hess, I know growing up here in Long Island, I used to have like a Hess truck. Was one of their
I'm not going
things
to sing the
you're
Christmas
from.
commercial jingle, but it's in my head. Yes.
But the fact that they're connected to the oil industry and Hess is a big offshore oil player reminds us that like 30, 40 years ago, there was no offshore oil, right? And now it's, I don't know, 30 to 40% of, production in America, or some very large numbers. So the metals company is disrupting the mining industry, like, or creating an industry. And the fact that Hess sees that, and I think, and the connectivity to the Trump administration, which has a strong affinity for oil based industry, I think is all positive. Uh, a question on processing. I mean, Glencore used to be, or is there some connection with Glencore still with the metals company, and with like the processing facilities in Sudbury, in Canada? Can you just process from existing operations? Because you were talking about, a new processing facility that someone else may build or in partnership with you. But can this be processed from existing nickel processors in Canada or elsewhere in the world?
Sure. Well, technologically, yes, of course. I mean, that was using some of those facilities alongside some facilities in the United States over the course of 2020 and 2021. We were able to prove out the flow sheet alongside Hatch that has now been deployed in the rotary kiln electric arc furnace facilities in Japan. But yes, technically, it could be done at some Canadian facilities. I think the promise or the opportunity that we can bring with this massive amount of feedstock to the US is an enabler for them to start thinking about how they can reindustrialize and bring some of that processing capacity back. Because for nickel, manganese, and cobalt, the US has zero primary production other than one mine in northern Michigan, the Eagle Mine, owned by Lundin. That's a great operation. We like those guys a lot. I grew up about 10 miles away from there, where that is. But even that's going to be running low on ore this decade. So the U.S. knows that they need another solution, and we think we can provide it. So, longer term, yes, it'll take time to build a facility like that. We are still a relatively small company, but we're growing quite quickly, and we have the right allies in place to do just that. Glencore continues to be a close contact of ours. They hold an offtake for half of our nickel and half of our copper from our first production area. However, that only is in force if the material is produced from a TMC-owned facility. So it would be a long time before there's a facility deemed to be TMC-owned, especially when we're using existing tolled processing from these facilities. Glencore did attend our site visit in Japan, so they continue to be very interested and excited about this project.
Okay, great. And I know you can't speak about GM specifically with this LMR, but I'll mention them anyway. Of all the companies in the space in America, GM has been the most proactive in partnerships, not only with LG Energy Solutions, with a formal joint venture to make their own proprietary cells, but also they've invested in Lithium Americas at project level, 38%, which was the subject of my latest lithium bull. But they're also partnered with MP Materials on the magnet side, and with Nouveau Monde on graphite. And I think they have a partnership, a small partnership in some nickel processing in Australia. But this would be, anyway, I call it government motors. What's good for GM is good for America, back in the day.
Mhm.
And I wouldn't be surprised if they should have, deep interest in this. I know Tesla has some small partnership with the Talon Metals on nickel, but, I don't know where that, they never stump up money. But anyway, that's just my commentary, not asking you to comment on that. The one last thing I would just allude to, I remember I was looking at your stock chart, and you're at a 52-week high. You've come a long way in a very short period of time. But I also was thinking back in my 23-year career. I remember visiting, your company is based in Vancouver. You mentioned Frank Justra, but Ivanhoe Mines, Robert Friedland is also, a legend, out of Vancouver. And I was looking at Ivanhoe Mines I remember visiting Vancouver in 2016. The stock had gone down below 1. It's been as high, it was a sub a billion market cap. It's been as high as 21. It's now a 20 million, Canadian market cap. So, uh, you know, I, I think, again, you're disrupting an industry here. I want to put up one of your slides show that there's enough manganese for like how many years, and nickel and cobalt and copper based on what you have here.
Yeah, over 400 at current U.S. consumption. And for all of these metals, we expect consumption to continue to grow. But at current U.S. consumption, 1 billion tons of nodules, which is about 2/3 of our total estimated resource, would supply 456 years of manganese, 165 years of cobalt, 81 years of nickel, and 4 years of copper. So it's not insignificant. And I think the Kamoa-Kakula analogy with Ivanhoe in Central Africa, that's a good analogy. It's about the resource. It's about the resource. And there are a lot of issues where people, Ivanhoe came into our office when I worked at King Street. It's probably now about 7 years ago, talking about investing in that company. And I wish I would have. Wish we would have put more money behind that. And a lot of our copper trades at the time, when copper traded $2 a pound. But why is that such an amazing project? And why are some of the other geopolitical concerns put to the side? It's about the grade of the resource. It's about the resource itself. And we have a giant resource. Yeah, it's big, but it's also very high grade. Those projects get developed and the value accretion to shareholders becomes quite obvious. So you can talk about all of the media concerns, or you can talk about, the ISA process. That's noise. What matters is the resource itself. We have more of these nodules in our contract areas than any other contractor. We've done more to de-risk the project. And now we have a clear regulatory path in front of us based on a legal regime that was put in place for this very reason, because the U.S. has been a persistent objector to submitting to the International Seabed Authority when it comes to seabed mining. So the path is quite clear. The future is very bright for us. And we're still trading at pennies on the dollar versus where we should. So it's going to be a very exciting few years ahead.
It's great. The overhang was always the permitting, and that permitting process is now looking to be quite uh, uh, easier or predictable. And I know you're going to be articulating to the market, very specific milestones along the way for that. And the PFS will have updated economics and the analysts covering it. I think Cantor, we've mentioned before, a few of our viewers have already asked us, and we've sent uh, some research from them and some of the other analysts. Just want to remind all our viewers, we are an advisor too, TMC, and a shareholder. So not investment advice, do your own research. But this is a fantastically interesting story that has a lot of, a lot to come. Once in a generation, kind of opportunities here. Another reference to Ivanhoe is also Fortescue Metals. I watched Andrew Forrest for many years from 2002. And that was a 10-year overnight success. And it's now a huge producer. And, so very exciting times to come. And thanks again, Craig, for joining us. And we'll look forward to having you on, and maybe Gerard and some of your other colleagues, to give further color to the story.
Sounds good. Always a pleasure, and have a great weekend.